our brief market update. We do this every seminar. We see how the Calgary market's doing. We touch on things like interest rates and supply levels, inventory. So what we're going to just point out with this slide right here is it's Calgary's stats year to date. I just have to move something on the screen here. So if you look at the first one, total sales, you can see that from January 1st to right now, as compared to last year, our sales are down almost 45%. You can see that in the frustration of our clients who are looking to buy properties right now. And it's because the inventory is way down. We don't have, well, we have the new listings, it's down 42%. So you can see why our clients are frustrated. There's nothing for them to buy.
Yeah, we're out with client. And not only that, so I need to stress this, if you are in the market right now and the property comes on and it sells in the first couple of days, or they're taking offers in 3 days time, be prepared to pay $10,000, $20,000, $30,000, $40,000 above list price. That's just what's happening, or at list price, depending on the property. So don't think you're going to go in and be able to offer like we normally do, Tim, you know, $30,000, $40,000 below list price to hopefully get the money off. It's just not happening. Will it turn? We're praying that it's going to turn, because it's really frustrating for our clients. We've had to tell them, if you're looking in the 660, say, price range, you shouldn't be looking at 660. You should be more looking in the 630, because if you like something that comes on, unfortunately, you're going to have to pay more for it. So that's exactly what's going on. We are hearing that the newer communities are softening a little bit on their new builds. It's not moving as fast. The prices are coming down. And that's the question about investing in new communities, Tim. When there's more supply coming on, you may have
purchased at a certain price level, say 600,000, and then as these builders start to build more and more and more of that exact same product, they're going to drive the price down, and the new builds will be below that 600,000 that you paid. So you just have to watch that when you're buying in new communities. If you're buying there for lifestyle because you love those communities, you love the amenities that are offered there, that's great. But be prepared to hold the property a little longer for prices to increase.
Yeah, for prices to eventually increase and go up.
Yeah, and what is also reflective of that is the median price. That's the midpoint of all the prices of everything that's sold in the city. It's coming down because people are having to move down in price level due to the increases in interest rates. So like we mentioned last week, if you qualified for $500,000 in a mortgage year and a half ago, because interest rates have gone up 4.5%, you're going to qualify for about 100,000 less this year. That's going to drive the median price down because all of the buyers are shifting down a price range.
Yeah, and don't let this average price minus 3.26% fool you guys, because everything under the 450, everything under the 550 range, Tim, is definitely going upwards. What's happening? Property prices above 900,000, definitely above $1 million. Guess what they're doing? They're going down, because the interest rate is killing those people's affordability to be buying in that price range. Not only do you need a bigger deposit when you go over $1 million, now your payment, I can tell you, I have a mortgage like that, your payment is doubled, right? So that is going to stall. And when you have the upper end of the market shifting like that, it's definitely going to impact the average price overall. But what we need you guys to understand as investors is at the bottom end of the market. We just released a video on our Crew TV about it. The bottom end of the market is booming, but it's never going to shift, Tim, because there's not that many sales. It's never going to shift the average price up to where it was.
Yeah. Okay. So that's Calgary in a snapshot. We'll continue with this market update. We'll get Danielle DeMarco in to speak to the mortgage market and stay there right now. One thing that is a positive is that the latest Bank of Canada meeting, they did not increase rates. So that's a positive. That's a reflection of inflation is starting to come down in Canada. Whether that continues, that trend, we'll see. But Danielle can speak about the mortgage market right now.
Yeah, thanks, Tim and Azad. So quick interest rate update on my side of the market. Tim and Azad are great with the housing prices and explaining how that all works. And as far as rates go, Tim, 100% correct. There was no recent increase to the Bank of Canada overnight lending rate. Having said that, we are expecting a 1/4 point increase prior to the end of 2023. So there is an increase likely coming in the prime rate, just didn't come quite yet. As far as fixed rates go, something interesting that I'm sure most of you have heard about is the banking crisis that happened in the United States recently. That actually had more of an effect on our interest rates up in Canada than I think most people had expected. So bond yields dropped a decent amount, and in response, the lenders up here actually decreased their fixed interest rates on their 4-year and 5-year mortgage terms, and they decreased them by quite a bit. We're talking about going from that 4.89-ish to even down to 4.64, 4.74, 4.79. So a decent drop for something that happened in the States that was kind of a little blip in time that normally we wouldn't see a reaction time in Canada for at least a few weeks. We actually saw quite an immediate reaction with regards to our rates. Now, I know I always preach that we like to talk about mortgage terms a lot, and not everything is about interest rate, but there are times where interest rate is really going to be a favorable conversation for you. So for anybody that's tight on qualifying, and this goes back to, Tim and Azad's comments, purchase prices are up, and what people can qualify for has decreased by quite a bit since last year. But since we've seen these rates come down these last couple of weeks, obviously, the lower the rate, the lower the stress test rate, therefore, the more that you can qualify for to spend on a new home. So by these rates coming down, we're seeing people be able to be pre-approved for a little bit more. But not only that, when we're talking fixed or variable, I just had a great conversation with a client today, and he was like, hey, wait a second, 5 months ago, you told me variable was good, and now you're telling me fixed. And I was like, yeah. The market has changed. The rates have changed. We've seen such a huge reduction in fixed interest rates since pre-Christmas that right now a fixed rate is a really favorable option. And for anybody, just to kind of give you an idea of how it differs, comparing a fixed rate and a variable rate right now in today's market, a family who makes an income of $115,000 a year, if you were to take the 4-year fixed rate right now, you could spend $500,000 with a 5% down payment. But that same family making that same $115,000 a year, if you take the variable rate, you can only spend $450,000 with that 5% down payment. So that's a difference of $50,000 in purchase price, which in this market, Tim and Azad can attest, is huge. It could be the difference between getting a property and not getting a property. It could be the difference between, the certain features that you can get in a home that you really need in order to make it a great rental versus not getting that type of property. So sometimes, yes, terms and, having flexibility on prepay or on payout penalties and things like that are important, but also sometimes in the market where we're in, we do really need to take into consideration the spread between the two types of mortgage terms and kind of see, okay, what is best and what's going to get you into that proper rental property that's going to cash flow. So it is important to have all of these conversations, and having an in-depth conversation when you're doing the financing about all of this is really, really critical. And just a quick tip for anybody who is house hunting right now and has been pre-approved recently, probably, I would say 2 to 3 weeks ago or longer, it's really important to get that pre-approval revised, because with these rate drops, we might be able to qualify you for a higher purchase price, which means we might be able to get you a little bit more property, or you might have some flexibility going in. Like Tim and Azad said, if you're looking at a 650 property, you actually need to be looking at 630 with the ability to go into multiple offers. And so the difference in these interest rates that we've seen recently might help you in that multiple offer situation. So lots is changing. The rates are extremely dynamic, honestly changing almost daily right about now again. So just reach out if you have any questions always. Terms and rates both need to go hand in hand, but also understanding how those different terms are going to help you qualify or hinder you in qualifying is also just as important. And so Tim and Azad, that is my market update for today on rates.
Awesome. Thanks, Danielle. So if anybody has any questions for Danielle, she will put her contact info in the chat on the side. You can ask her anything, about your current mortgage, or if you're looking to get a new mortgage. just drop her a line and she'd be more than happy to answer it. As mentioned before, Danielle is our go-to real estate investment mortgage broker. She not only gets you a mortgage, but she puts you into a real estate investing plan so you can get as many rental properties as you want over time.